Welcome back. You're watching KTN Business Today. Time now to get the latest updates from the car industry. And joining me this hour is none other than Mark Kars, who is the CEO for CMC Motors. Pleasure to have you once again.
Thank you, Abby.
Looking good.
Thank you.
Of course, we did have the budget, and a lot of surprises came in from CS Henry Rotich. Perhaps, I don't know what stood out for you.
Well, I think the change in duty possibly back is one that really stands out for us. We thought the new car market had some relief, a bit of a breather really, where we could bring people onto the new car ladder.
Yeah.
But without reading the full bill, and I think it won't be published and probably effective to September, it doesn't look positive. It looks as though used car imports are being favoured again over new vehicles. So it is a concern for the industry.
How is this likely to impact car dealers really?
Well, I think it's significant, Abby, because we were thinking of CKD out of Thika, that we have a share with the Kenyan government. This is obviously going to set us back. And what worries me more is the small car market. In other words, the people that are coming onto the ladder, the entry point, and where does it stand for them now? And it is a concern.
Mm-hmm. So what you're saying basically is that this is going to interrupt the momentum we had already picked up as an industry.
Well, it is, and I think it's going to confuse people as well, potential buyers, because what we had a year ago changed. And now we've got back what we had. And I think people are confused because there's mixed message coming from the government about whether they really want to fuel the new car market in East Africa.
So would you perhaps want a review of this?
Look, absolutely. And I think everybody, all of the main distributors will feel the same way. Principals and manufacturers are asking for more investment in people, in facilities. It's all down to scalability. And if the new car market is shrinking at the rate that it is currently witnessed this year, then it's of huge concern, Abby.
Mm-hmm. And away from this, let's talk about the numbers really, because I was just having a look at some of the KMI numbers, and it seems the numbers are not looking up compared to last year.
Well, last year it was interesting because it started quite slow. It had a very busy middle, and it was quiet at the end. But no, the new car market is in total disarray. It is shrinking. I've just got the KMI statistics today to tell me that the month of May dropped by as much as 50%. I think that's probably the first time in Kenya that the market shrunk year on year by 50%. And it's now worth less than 1,000 new units for all of the distributors and all of the investment in the country.
What could you attribute this to?
I think I can put down to a couple of things, really. I think number one is asset financing and the bank's participation, particularly in loan to value and deposit creation. People are being asked for more. And I'm sure it's affecting the KRA. And that, I'm sure, is one of the reasons behind the change in duty structure, whereby the person that was fundamentally from a shilling up to 1 million shillings, they've got to reignite that market to bring in the revenue, and that's exactly what they seem to have done.
So looking at the car market, we are seeing a lot of activity at the moment, especially from second-hand dealers. Perhaps how big is it, and how much worth is it?
Well, it is big. The problem that we have is the barometer on the used car value. There's no official guide. Mm-hmm. And if you were to take imports that are coming in fundamentally from the Middle East, you know, are they compliant? Are they Kenyan compliant? Are they European compliant, Japanese compliant? And it is a confusing business. And it's one really that we've decided at this moment in time that we don't want to enter.
Mm-hmm. So right now you're seeing this particular action from government, and of course, it will have an impact on you guys as well as the other bigger car dealers. So what is the end game in terms of how do you recover? Of course, this has been done. How do you reverse it?
Well, it's interesting because if you've asked me my business strategy 8 weeks ago, it's very different to the strategy that I have today going forward. And I think what we're going to have to do is button down the hatches for a little while. We're going to have to perhaps look at some of our working capital constraints. We're going to have to look at whether we invest in property now or whether we wait for the future. Because 1,000 units a month across 45 million people and probably 25 automotive brands is a huge concern, and it's got to give somewhere, Abby.
Mm-hmm. And still going back to the budget, we did see significant allocations going towards different kinds of mega projects, the LAPSSET project, and the list goes on and on. Of course, this also creates another facet for car dealers, especially the heavy commercial. I don't know, are you targeting this particular niche?
Well, we've got 3 great brands in heavy commercial. We've got MAN that fundamentally competes head-to-head with people like Mercedes and Actros. We've then got a value proposition in UD, very synonymous and famous in Kenya, and then Aisha, which competes with Tata. I think, to answer your question, honestly, we've not yet seen that benefit, Abby. it's not come through the big projects. And if they have, they certainly haven't been felt at the OEM level or the distribution level. But we think in time it will come. And I think equally in agriculture it will come, because we're huge in agriculture with a 50% market share. But again, I think it's really watch this space.
Speaking about watch this space, the car industry seems to be getting competitive by the day. It's 2 years since you lost your biggest franchise. Perhaps when you look back and now, what are the changes that you have done to the company?
Well, I think there's a few things really, Abby. I think that firstly, we've reunited the company. It went through a really difficult period, 4 or 5 years, particularly with the Nairobi Stock Exchange, etc. And what we've done is we've got a feeling of belief back in the business and ownership. So the Ford brand has been pivotal to that. The Ford brand now, and I've said this before, I feel is in the best place it's ever been for 10 years. It's got the best range of product, technology and advancement of engine. And I think that's cemented by the fact that we sold 530 to the Kenyan police last year. So the Ford brand is our pivotal brand. And what underpins that is a host of different channels, whether it be heavy commercial, agriculture, construction. So we've kind of got a 360-degree look at the auto business. And they're very cyclical brands, Abby. When one's down or one channel's down, hopefully another one will come in and save you. And that's the way we look at it.
All right. In all fairness, of course, experts have come in saying that the franchise you had, which was Land Rover, is not quite significant to what you replaced it with. What would you say regarding the value proposition that is coming on board from this new franchise that you did get?
Yeah, well, we were the biggest supplier of GOC for many years by way of Defender, and it was a vehicle today that we serviced the breadth and depth of the country, go on for 300,000-400,000 kilometers, and wonderful. But I think that now they've decided to discontinue that and go upstream. I think now Ford, by way of Ranger, by way of Everest, and by way of some of the new products that are coming to Africa, will take that place, and we've got no doubt about that.
All right. Looking at also the company, at some point there are corporate governance related issues. And right now, it seems things are quite stable compared to a few years back. Of course, now that you also have Al-Futtaim Group coming on board, what does this mean for the company moving forward?
Well, I think the thing about Al-Futtaim, 45,000 people, 32 countries, very large conglomerate. Governance is incredibly important. So audit controls, regulatory governance won't be compromised. And therefore, we really run effectively like a PLC. And I think it's very important, Abby, because trust amongst our suppliers, trust amongst some of our brands that hasn't been there for many, many years, our banking relationships is incredibly important. And I think we've put that back into the company.
So at the moment, any actions expected in the market in terms of new releases?
Well, there's certainly no new brands. Why? We've got 9 brands, which is a lot of brands. We've got an engineering division that underpins that as well. So it's a big business, very complicated in its structure. But what we're looking at is new channels. We're looking at our digital platform. We're looking at quick service and tie-ups with some of the major oil companies throughout the country. We're looking at container service in places that are hard to get to. So there are some new initiatives, but they're initiatives really to convenience the customer, because it is all about the customer, Abby.
So how significant will this be on the bottom line?
Well, the bottom line, we don't always look to make money. We plan for the long term. And the strategy is that if we can get things right now and we can change the perception of the customer, we'll reap the benefit when the market comes back. And we're expecting, in truth, a very difficult 16 and 17. We think that leading up to the elections, we certainly haven't got the buzz that we expected in the first half. And I think post the election will also be a quiet period. So we're really gearing up, Abby, for 2018.
Many thanks there. We're speaking to Mark Kars, who is the Chief Executive Officer at CMC Motors, just giving us the latest updates from the car industry. He sounds quite optimistic that things are looking up 2 years after they did lose their biggest franchise, and right now they are managing close to 9 other brands. Let's see how that goes. From our end, thank you for keeping it KTN.